Good morning and welcome back to Almus Market Mornings. There has been some ongoing negotiation attempts to bring an end to the war, but while that story is developing, the real stuff in the background is indicating US troop deployment to the Middle East. Maybe it's just for a show of power while the negotiations go through, but nothing should be ruled out at this point. Markets otherwise carried the relief rally sentiment yesterday. The rupee seemed to ignore all of that, remaining well near its weakest levels. Precious metals are staging a recovery, while WTI and Brent dipped down a bit. Good morning, JK. What are you reading out of this negotiation attempt? Do you feel a de-escalation is on its way?
Good morning, Swaraj. So there are reasons to believe that things are moving a little bit. We don't know when a conclusion or a definitive outcome will happen. Uh, so despite Iran denying that US was in contact with them for peace talks, Trump seems to actually believe that he can achieve a credible solution, and he actually is buying time with that 5 day deadline, 5 day stoppage of the war to negotiate and get a settlement. Some reliable media report also say that in a lot of diplomacy has prompted early discussion about an in-person meeting in Pakistan or Turkey later this week between US and Iranian officials. As per even the Wall Street Journal has mentioned it. And Trump's shift on the Monday morning follows a series of closed-door discussions through Middle Eastern intermediaries. That officials they gave them hope to an agreement to settle the conflict was possible. It also reflected a growing desire by Trump and some of the advisors to bring the war to a close, as per some close aides of the president. So there is some movement here, no doubt. Now there are also possibly a plan B, or it may be some sort of preparation for securing the Hormuz Strait being kept open with a joint force. We do not know, but there are reports that Pentagon would be sending 1,000 more troops from the elite 82nd Airborne Division to the Middle East. Some people thought it's whether it's going to be another uh, conflict if the talks fail, and even there are also report that there are a huge number of Marines that are also headed in the same direction. Uh, there is another report which says that there could be a 30-day ceasefire, and that may be giving a time for all the parties concerned to arrive at some sort of an agreement, a more sustainable agreement. That's what it indicates. Um, Oil futures have turned negative. Possibly, ultimately, what they say is price is God. So if you see market moving positively, it means that there is a sense that markets, sorry, the things are moving in right directions as well. Of course, there was also some concern when even the Middle Eastern countries wanted the US side to finish this conflict, to against Iran, because they're eager either to make a peace deal or at least to stop the Iran's aggression, being the most affected countries in this. We'll keep watching the developments on this, and let's see if we do get a positive development. And of course, markets are currently discounting a slightly positive development. We see the gold and silver break higher. Dollar is weaker. I would say still within the range. It's not made a new low since Monday. And the yields have also come off a bit, although they soared again yesterday after failure of big bond issuances by the US government. It's very critical for US that oil prices are held lower because that has a huge impact on their fiscal, and that is definitely something they would like to stop. Then, on the economic news, of course, while war news takes the precedence over everything else, we have had the economic news which says that the PMI composite in almost all the regions has been lower as per the preliminary survey. And fears of stagflationary situation is rising in most of the regions, and that's the worst case for the stock market. Yes, we will have a relief rally if the war stops, but it all depends on where the oil settles eventually, and whether the supply chain issue is resolved. That's a key for the markets going forward. And staying on the monetary policy, Bank of Japan minutes showed that members had a concurrence that given the real interest rates were significantly at lower levels, if the outlook for economic activity improves, they want to keep up the pace of rising interest rates. So we are just to reiterate what I stated yesterday. We are in a situation of monetary tightening going forward. Perhaps fiscal concerns also will increase as government spend more to support the economy. So yes, I think we keep an eye on the news, and accordingly we see how the market settle down going forward. Right now there is some room for optimism that is visible. For India, yes, 94 has not broken, at least in the domestic market. Although in offshore it has traded well above 94, but it's currently trading lower than that. On the news side, India, nothing. Most of them are underwhelming. The composite PMI for March preliminary survey showed it's quite a dip, to 56.5 from 58.9 in February. This is the weakest expansion in the Indian private sector activity since October 2022, as growth moderated across both manufacturing and services side. In other, significant data points also is that RBI data shows the NRI deposits have fallen 25.86%, in April to January period. So that's also, in the context of missing capital flows, this becomes very significant. FII outflow hit 12.5 billion as on yesterday in March. And for the year 2026, it's about 11.5 billion. And 12.5 billion is the highest outflow that we have seen since March 2020, when we were hit by COVID crisis. And, just to give you another perspective, in March 2020, exchange rate was 75, and at the cumulative flow of FI at that time was 226 billion, even after accounting for the big outflow at that time. Now, cumulative cumulative FI investments into India was 226 billion as on 2020 March, and it is now at 268 billion, which means on the 6 years since then, we have seen an increase in the FI flow. But where is the rupee? Rupee has gone from 75 to 94, or maybe, so this type of depreciation in the rupee is, so it clearly shows that not just the FI flow that matters for the rupee. We are having the consistent deficit that is also playing a big part in the rupee, and more and more outflow from FDIs. FIs were missing, and FIs have been almost nil or slightly negative for the last 2 years, from a good positive that we were seeing till 2023. So these are actually very fundamental issues behind the rupee's weakness, and unless we see a real turn on these, it's difficult to see rupee making any sustainable gain. So we be prepared for the rupee to be on the underperforming side for some more time, until at least till this current war crisis is addressed fully, and then of course if the foreign investors should take a more positive view of the market. One silver lining I would say is that whenever No, there have been large outflows from FIS in a particular year or 1 or 2 years. It has been followed by a year in which there has been massive inflow. Cumulative flows increased much more than it was prior to the outflows. So it means that FIs can't keep away from the Indian market for too long. So it's a possible, at some point, as the valuations also get moderated, which is now currently, we can see the turn in the flow pattern as well. So that's what we are looking for. And of course, on the other news, there is also, government taking many initiatives. One of the thing being, all-party meeting that is called for Wednesday, seeking to address the various points related to the current crisis. So maybe some important decisions coming out there. Some media is hinting at about emergency measures that some other countries have adopted about partial work from home, etc. So I'm not sure, but this is what the media is indicating. Just we'll wait for the news flow in this regard. Thank you.
Thank you, JK. And yes, looks like there'll be some updates that will come in from India from the all-party meeting. Government is trying to take some measures because, of course, the conflict is hitting us as well. But otherwise, on the financial markets front, dollar rupee has not broken rupees 94 figure in the onshore market at least. Looks like it's trading even lower as of now. March PMI number for India dipped to 56 from 58. There's a slight moderation. NFI outflows have hit $12 billion in the month of March. So that's a significant development. Overall, that's a theme we have been covering for some time. Even before the conflict, flows were a bit scarce. And even during the conflict, we are having this exodus of money. Globally, we are seeing a recovery kind of move. Gold and silver have broken higher, dollar slightly weaker. I think generally the risk sentiment is a bit more positive even today. We'll see how sort of the geopolitical developments go on because there are a lot of different kind of developments. First, there is Iran, which is denying the peace talks. Then, there are some talks that Iran and US officials will meet in Pakistan. Then there are other reports which are saying Pentagon is sending troops and Marines to the Middle East. So, there's a lot going on. So, we'll just take it as it comes. That's it from us today. Thanks for listening. Tomorrow is a market holiday on account of Ram Navami. We will catch up on Friday with a fresh round of updates.